The Sustainable Future UK Growth Fund is for investors that want to benefit from strong capital growth by investing in UK equities. I'm pleased to say the fund has just passed the 200 million milestone mark, which is particularly pleasing for me since I've been managing it since 2005. What we're looking for when we're looking for the stocks that we will invest in is companies which are more sustainable, so they are helping to improve quality of life or reduce environmental pollution or reduce environmental impacts. So that's the first element. The second element is that they have to be very strong businesses in themselves. And the final part, which is crucial, they have to be undervalued so that you can get the capital growth as those companies start to deliver. If I mention a few companies which the fund has been invested in for some time and which have done particularly well over the last couple of years. The first two are in biotechnology, and there's a company called GW Pharma, which we've held in the fund for around about 10 years. It's recently met crucial milestones in developing its range of cannabinoid medicines for the treatment of MS and cancer pain. So really pleased with that outcome. The second is a company called Vectura, which again is a British biotech success story in that it is managing to develop treatment methods for respiratory illnesses. So two clear examples of how companies are benefiting by having good medical outcomes for their patients. In our resource efficiency theme, one of the companies which has done particularly well is DS Smith. DS Smith take the waste paper and cardboard from supermarkets like Tesco and Sainsbury's. They then recycle it and sort of upgrade the use of it to make packaging, which then gets sold back to the supermarkets. So it's a very nice example of a nearly closed loop system. Now they are adding value, and so they benefit from that value in the profits that they get. So a good example of a company which is using resource efficiency to deliver strong growing profits. And the final one is a technology company called Oxford Instruments Group. It essentially provides the tools for researchers to do experiments and research at an atomic level. So all of these new materials, all these new sort of semiconductor devices which help us become more efficient as a society are being developed using the tools which Oxford Instruments sells. So we measure this fund versus the FTSE All Share, but also we compare it to other actively managed UK funds. And on all counts, this fund has performed very well through 2013 and over the last 3 years. In terms of outlook, it's fair to say the UK economy is strengthening, but nevertheless we are still seeing emergency interest rates. People talk maybe interest rates will go up in a year or so's time. So the economy is not in a robust shape. That said, the companies we're investing in should grow over the long term, reasonably independent of that economic growth picture, because they are helping to provide us with a more sustainable future.